Professor Carlos Larrea comes from the Simon Bolivar University in Quito, Ecuador, and he has a very impressive record of publication in social research, more than 15 articles, 85 books. He also has an amazing international experience in terms of his educational training, so he's been at York University, Harvard University, and University of Michigan. And he's now coordinating the social and environmental research program at the Simon Bolivar University. And in addition to all that, he was also an advisor for the Yasuni-ITT project in Ecuador. So it's my pleasure to introduce you to Professor Carlos Larrea, and please, let's welcome him.
Thank you very much. My presentation this afternoon will deal with a country case study, the case of Ecuador, and the main topic is strongly related with the discussion in this seminar. What are the long-term advantages and problems of this structural change we have seen in most Latin American countries? This shift towards an expansion of extractive industry, particularly oil and mining, which has been very strong in some South American countries. I'm going to analyze the case of Ecuador, and my perspective will be a long-term one. Let me explain a little bit what are we doing. In 1972, Ecuador became an oil exporter. In some way, Ecuador is a newcomer in the oil business, as opposed to the Venezuela case, in which actually Venezuela has been extracting oil for almost a century. Ecuador began to do that in 1972, about 41 years ago. But as opposed to the case of the Middle East countries, Ecuador is not extracting the oil from the desert. Ecuador is doing so from the Amazon basin, which is actually the largest remaining rainforest in the planet. And the environmental impacts of oil extraction has been very, very serious. That is essentially the contradiction the country is facing. So my objective will be to analyze what has been, during the last 41 years, the relationship between oil extraction and sustainable development. What's the idea? We are not going to concentrate only on economic growth. We are trying to analyze first economic growth, second economic diversification, which is extremely important, third social development, and finally the environmental impacts. When Ecuador began extracting the oil, Rodriguez Lara, who was a dictator, a military dictator at that time, said that Ecuador must sow the oil, thinking in that oil as a non-renewable resources need to be transformed in some way through investment and diversification into development. So now Ecuador is in the declining phase of the Hubbard peak. Oil reserves are quickly declining. So it's important to make an evaluation, a long-term evaluation about the the benefits and problems that the Ecuadorian economy is facing now. That's the most important idea of this presentation. So let's begin with a very kind of a brief overview about what is going on in Ecuador. Thinking about economic diversification, actually Ecuador is one of the less diversified economies in Latin America. Primary exports, according with the Economic Commission for Latin America and the Caribbean, account for more than 90% of exports. And actually the group of exports is quite limited. This is the second worst case in Latin America. Secondly, oil only accounts as a single product to 50% of total exports, and it accounts also contributes to 29% of fiscal revenues, but only 11% of GDP. In addition to that, if we analyze the recent information about the productive structure of the country, we can see, we will demonstrate it later, that actually the country failed to diversify its economy. Actually, manufacturing, the ratio between GDP, manufacturing and GDP has been declining since the 1970s. So we are facing a serious problem of weak, generally economic diversification. Actually, we reached some important goals in terms of renewable energy investment in the last 5 or 6 years. In addition to that, actually the government was successful in social investment in the last 5 or 6 years since 2007. We have an important reduction of poverty, inequality, and important investment in education and health. Nevertheless, poverty still is affecting about a third of the Ecuadorian population, 35%. Underemployment affects more than half of the labor force in the country, and in spite of some important achievements, Ecuador is still a very unequal country. We have a Gini coefficient of 0.46. Actually, Latin America is the most unequal region in the world, and Ecuador is among the most unequal countries in South America. As I said, oil extraction have very serious environmental costs. And it is very important because we need to think about the future. In the context of climate change, another global environmental serious problems like the loss of biodiversity, if we don't think on the long term, if we don't think about the environment, actually any kind of benefits we can receive in the short term will be gone shortly. So it's very important for Ecuador as a country, for Latin American region as a whole, to think about sustainability in the long term. I will very briefly comment some of the issues that has been presented in the literature about the disadvantage of an specialization on extractive industries in developing countries, particularly in the case of Latin America. During the 1950s, actually Prebisch and other people from the ANCLAS and Sinker pointed out that primary products in general are facing worsening in terms of trade. That means the international prices of these goods are in the long term declining, and they are very volatile and unstable in the short term. We have the problem of the Dutch disease, which actually means that when we have a booming primary, in the case of Ecuador or Latin America, export period, it creates very weak opportunities for further economic diversification. So once the boom is over, we have an economy that's weakening with a process of deindustrialization, and lack of diversification that creates also a deep, vast period, so the economic are not in good shape to recover. We have a very interesting econometric analysis that Jeffrey Sachs did in the 1990s, and he concluded from a database of about 40 countries for 40 years, for about 100 countries in the world, that the specialization on mining and oil actually is detrimental to economic growth. That means that in average, and other things being equal, oil extracting countries performed worse than the rest of developing countries in the planet. We have a very serious problem of unemployment, structural unemployment. That means that usually both oil and mining activities are quite capital intensive, so direct employment generation is very weak. If we don't have an effective investment policy by the state, usually the result is an increasing inequality and very serious structural employment problems. We have the problem of institutionality that was analyzed this morning by Tony Bevington, and also the problem of the failure of local development prospects. So the link between extractive industries and the local economy and society is very weak. And usually it leads to a situation of high conflictivity and poverty and inequality at the local level. And in addition to that, we have high environmental degradation. Those are several of the problems that usually extractive economies face. Nevertheless, as has been mentioned, in national cases are very different. So we cannot take this context as given. We analyze case by case what's happening in each kind of countries. We have in Latin America some very different experiences, like for example Bolivia, who is still one of the poorest countries in South America after 500 years of extractive specialization, and the case of Chile, which seems to be more successful, exporting minerals as well. So we need to go deeper and analyze the situation in every case. Here we have the evolution of per capita income in Ecuador in the last 60 years. And we begin in the 1950. In the year 1950, this is the banana exporting period before oil was discovered, and we have some not so strong but more or less stable process of economic growth. Then we have the oil boom, so the economy jumped actually. But economic expansion lasts only about 10 years, and then we have a long-standing economic crisis during the neoliberal period. So actually, per capita GDP almost didn't grow in about 20 years, and we have this last period we are analyzing this morning. This I name it the post-neoliberal period because it's very difficult to find a proper name. But it is not very different from the evolution of Latin America as a whole. The difference is that economic growth in Ecuador, the level of economic per capita income is a little bit lower. But we have more or less the same evolution in other Latin American countries. What we can conclude from this, that's very interesting. First, the average economic growth during the oil period, which is everything from here, these last 40 years, has been lower than the economic growth we have in the 1960s and in the 1950s. Before oil, we have a growth rate of 2.1% per year. And after that, the average growth rate we reached was 1.3. That means that it was even lower than the growth rate we had before the discovery of oil. Secondly, even that the evolution has been weak, it has very unstable because we have at the beginning a huge expansion, and now we have another period of expansion, and in the middle we have 20 years of stagnation. So we need to explain it, why it's happening in the same country, and that is basically the objective of this analysis. So we have here the evolution of per capita income during different periods. During the banana period, 2.1. The oil boom, we went up to 6.2. Then we have the debt crisis with negative growth, the neoliberal adjustment with almost nothing, and finally the current recovery, which is not as strong as the oil boom, but we turn it back to positive and more or less sustained rates of economic growth. Here we have the other side of the problem, what's going on in the future for the country. We have these are evaluation of oil reserves, remaining oil reserves, and the extraction capacity of the main oil fields in Ecuador. And this is the beginning of the oil period, 1972. In the present, we are about here. And this is what will happen in the future. That means that based on the production capacity of our fields, we are facing a very, very quick decline in our extraction capacity. This is more or less similar to the normal curve of the Hubbard peak. So the possibility of new oil discovery reserves are actually weak because we have been exploiting oil for at least half a century. So it's very difficult that we will find out a huge field that nobody discovered in the past. So actually the oil reserves are declining, and the country will become a net oil importer sometime between 2030 and 2035. Here we have a table of the net export capacity of the country in the last 12 years. And you can see here that actually in 2012, net exports, Ecuadorian net exports are down for about 21% compared with the one we have in 2005, in 2004, when we have the peak of the curve. That means essentially that Ecuador is already affected by declining oil extractive capacity. And the process will last maybe 20 more years. So for the country, diversification is strongly needed. It will be very difficult for the country to face the next process in which the main export product will be progressively disappearing. Here we have the results of some forecasting about oil extraction, and here we have the last year in which the country will be extracting oil or exporting oil. Actually, it's something according with different test scenarios, with high or low reserves, high or low growth of per capita of domestic consumption. So we have about maybe 15, maybe 25 years to transform the economy so that we will be able to have a sustainable improvement in living conditions for the population. So first we need to identify some factors that can explain why in Ecuador we have process of quick economic growth but not sustained, followed by declining cycles. And based on the literature and the Ecuadorian experience, I selected 4 explanatory variables. And the endogenous variables are, first, state participation in oil revenues, which changed a lot during the period, how much the state is able to tax foreign companies extracting the oil. Secondly, the institutional capability of the state to properly invest in social development. So this is linked with institutional theory. And as a contextual variables, I will take into account real oil prices, which are very unstable. And finally, oil export volumes. So this is a kind of summary table of what I did. Here, for you to see in detail will be difficult. We have the oil boom, the structural adjustment period, and the post-neoliberal period. During the oil boom, as I mentioned, actually, here we have the growth rates of the economy. Here we have the model of development. We follow an import substitution industrialization strategy in the 1970s and structural adjustment policy in the 1980s and 90s. And now we are trying a different strategy based on human capital development and investment in infrastructure. Here we have export quantum. Initially, the extraction was relatively low. Here the figure is 6.9 thousand tons per year. We doubled it during the structural adjustment process, and then also we increased it dramatically in the last 10 years because a new pipeline was built, so we overcome the transport capability restriction. So actually, oil production now is about 3 times higher than what we had in the 1970s. Obviously, our oil prices are also the highest in the 40-year period. So actually, as happened in Bolivia as well in the last presentation, we saw that the purchasing power of oil export is almost 4 times higher than we had in the 1970s. The state participation in revenues at the beginning was about 80%. It declined to about 20% during the neoliberal period, and now it's recovering, and it depends on the price and some specific contracts with particular companies, but on average we are about 75% again. So here we have the highest volumes, the highest prices, the highest state participation in revenue. So actually the situation in the last 6 or 8 years has been extremely favorable to the country. We have a stronger institutional capability of the state to invest in social development. So actually prospects might be very favorable. Nevertheless, the situation is not so good if we analyze the future, taking into account first that we are in an international context of an international financial crisis. China is growing at about 60% of the growth rate it had in the past. Most of the emerging economies are also stagnating, such as the case of India. And and we are facing also a technological change, very quick technological change. Actually, oil demand in developed countries declined by about 10% in the last years. In addition to that, we have a strong expansion of oil extraction in the United States. Maybe the United States will become an oil exporter in the next 10 years or so. So probably oil prices will decline in the future. If oil prices decline and volumes exported will decline as well, so prospects are not very good. That is why, and this is also applicable for most Latin American countries, because we didn't see a process of economic diversification in the region as a whole. So the region had, in the last 10 years, a very high economic growth, but it's mostly the effect of terms of trade. of favorable prices. But this boom is not going to last forever because we don't have a structural change in our economic situation. And that's particular case in the case of Ecuador. Here we have the process of industrialization, which is quite interesting. During the 1970s, we have import substituting industrialization, so the share of manufacturing in GDP went up. And here we have 1982 at the beginning of a structural adjustment, and then it declined. And what is very interesting is that in the recent years, in spite of a fiscal policy, economic strategy based on selective import industrialization, actually it failed because the share of manufacturing in GDP is continuing going down. So actually we have a process of deindustrialization instead of process of industrialization in the last 30 years. Here we have an analysis, I'm not going into the details, about subsectors in manufacturing. Ecuador is basically producing food and beverages and textile industry. So we are producing mostly consumer goods. Both the intermediate goods and capital goods are very weak, and we can see the share of it subsectors from 1965 to present, and actually we cannot see a process of diversification. That means that what will happen with our manufacturing sector is we have an expansion and demand driving expansion in the periods of economic growth, but the internal structure of manufacturing didn't change. So actually we didn't have the diversification. Here we have the evolution of oil prices. That's very interesting. We have very high oil prices in the 1970s, a sharp decline in 1985, then a long-standing period of very low oil prices, and now we have the process of recovery. That's more or less the evolution of the economy. But the problem is that oil prices are an exogenous variable. It's not controlled by Ecuador. So that is why economic growth cannot be stable or predictable in the future. Here we have the export quantum in Ecuador. We have a low production capability in the 1970s. We faced the crisis increasing the pumping capacity of the pipeline up to almost doubling it. And then in recent years, we built a second pipeline. So actually our extractive capacity went up, but it was a one-step jump. And then we have this decline, which is actually the result of exhaustion of reserves that cannot be reverted. So in the futures, probably we will continue going down. And that's the problem. Here we have an analysis about export diversification. We have here a total export purchasing power, taking into account inflation and change in international prices. This is very similar to the curve that Tony Bevington presented this morning for several Latin American countries. And here we have oil, the second line. They are almost parallel lines. That means that essentially the Ecuadorian economy is very, very heavily oil dependent. And we have everything else, which is this lots of flat lines down. That means that actually what we did to diversify exports has been very little. And we have bananas, sea products, other traditional and not traditional products. We have some expansion, but the problem is a problem of size. Even if you have a 10% growth here, it will be a lot of time for this kind of export to replace oil. So it's not going to work out in maybe 10 or 20 years. Here we have the same analysis, but eliminating the price effect, analyzing only quantum exports, the volumes. And we have the same problem, and we can see it very clearly in this chart. This is the percentual, the sharing of exports by four kinds of products. First, we have here oil. In the last 40 years, from 1972 to 2012. More than half of oil export. The second product, the second most important Ecuadorian product is bananas. And here we have the bananas share. The third one is sea products, mostly shrimp, tuna, and other processed fish. And if you add them up, you have with three kinds of products about 85% of exports. That's lack of diversification, because everything else is only between 15 and 20%. It's very low. That's the problem. And the second problem is that we have the same basic structure in the last 40 years. So we didn't have a structural change. The economy failed to diversify. That's the problem. So here we have, I'm going to talk briefly about social development. Here we have an important indicator of education, which is the average years of schooling of the population. We have some improvement before the oil boom, and actually social change follow more or less the same path of economic change. That means that we have an important social investment during the booming periods, but we have an stagnating economy. Actually, we have a process of social stagnation as well. Here we have the problem of employment. In this table, we will demonstrate that actually there is not important achievements in terms of reducing underemployment. We have some progress, but it's actually very slow, taking into account that we are talking about 50 years in change. So actually the country still remains affected by a very serious problem of structural unemployment. Here we have some evidence about the environmental impact of oil in Ecuador, which is actually very, very high. Here we have a very interesting prospect about the effects of deforestation. We analyzed this curve, which is a parabolic curve, based on some regression models. So at the beginning, this is before deforestation. This is the process of deforestation, and it is 100% deforestation in the Amazonian basin. And in the vertical axis, we have social development. So we have the initial gains from deforestation for households, and then after about 50% of deforestation in the Amazon, what happens is that we have a process of social deterioration. That means essentially that we have a loss of biodiversity without any social compensation, because the household situation after deforestation is more or less the same as the situation before deforestation. So there's actually not sustained social improvement in household conditions in relation to this environmental damage produced by deforestation. We have here satellite information about the destruction of rainforests in one of the main roads built by Texaco, actually in the 1970s in Ecuador. Here we have the result of a state company inside the Yasuni National Park. This is a road that was built by Petroamazonas, which will be the company that will exploit oil in the ITT field. And the government says that it is an ecological trail. This ecological trail is, you can see here, this is a very big machine. Yeah, so actually this photo was taken by and published by National Geographic in January 2013. That means that actually we are continuing extracting the oil using a very traditional and very high impact technology, which is actually a very serious problem for the future. Well, in the final part of my presentation, I am going to explore alternatives, because we need to think about a post-oil economy and society. In the case of Ecuador, we have the experience of Brazil. Brazil managed to reduce 70% its deforestation rate from 2005 to present, which is a great success. We have the case of Costa Rica, in which tourism account for about 6% of GDP and 6% of direct employment generation, compared to Ecuador, and also Peru, which is more or less the same to Ecuador, which is very, very low. So actually, in the case of Ecuador, we are one of the most biodiverse countries in the planet. We have also a very strong cultural diversity, the potential for development of other activities which are more intensive in employment generation and also are sustainable in the long term, such as tourism, ecotourism, and other ways in which we can use biodiversity without destroying it. I think Ecuador still has prospects for an alternative development path, but it needs, in order to get it, a coherent environmental policy in the long term. The current government strategy is the idea of deepening extractivism in order to overcome it. I am particularly skeptical about this way because, as we can see from a long-standing experience in the country's history, 41 years, actually prospects for diversification, in spite of the willingness of the public sector, didn't materialize it. So we need to go somewhere else. And the only way to do that, even taking into account the future impacts of climate change, is to try to turn, to have a kind of change, structural change, a turning point towards a sustainable development path based basically on sustainability and conservation. Well, that's essentially the idea of my presentation. You have an article that, if you are interested in in more detailed analysis, will be available for you. So I have a first draft of my article in which you have much more information than the one I presented here. Thank you very much. Well, actually, regarding Kazakhstan and other oil-rich countries in South Asia, I think we have the same shared problem. Obviously, your per capita GDP probably is much higher than in the case of Ecuador because you have a lower population densities and probably more oil. Nevertheless, we have the same problem. Because if you compare the situation, even taking into account very rich Middle East countries like Libya, for example, we have a much difficult problem of economic diversification. Yeah. So this is a shared problem, and we need to think about ways of development of alternative options. And I don't know, well, we have different cases in different parts of the world, but actually it's very difficult to find a kind of successful example of a developing oil extracting country. We have a very successful experience, for example, in the case of Norway, but it was already developed, as John Mills will demonstrate probably tomorrow. Regarding non-market strategies, I think in the case of Ecuador, it's a very, very important issue because we have about 30% of the population living in a familiar-based economies, household-based economies, that probably in the future won't be strongly linked to the market. So we need to create a kind of ecologically friendly agricultural-based production, using mostly techniques of agroecology, agroforestry, and probably local-based economies in which we have more resilience to impacts of climate change in the future. So it's very important to create an alternative based on small-scale agricultural production. markets usually tend to create more inequality in the long term. So, and Ecuador has a lot of potential. The same is true about carbon dioxide credits. Actually, the Yasuni-ITT initiative was a very important proposal to make a kind of economic contribution from the international community to sustainable development, because we will save about 4 million tons of carbon dioxide if the Yasuni ITT fields are not developed. That was the idea. Unfortunately, the president eliminated this proposal about a month ago. But I think this idea is very important and might have a very important effect in the future. Because if we don't leave unexploited at least a significant part of our fossil fuel reserves worldwide, we cannot avoid a global warming of about or more than 2 centigrade degrees, which will be catastrophic at the planet scale. The only way to keep the planet safe, keeping global warming in limited, will be to save at least 50% of currently proven fossil fuel reserves. And we need to create an international mechanism to do that. And that was the most important contribution of the Yasuni-ITT initiative, and it must be in some way replicated as the only way in which we can have a binding international future agreement on climate change. The issue of climate change is too serious in the future, and it's a global problem. So we need to face it. And obviously, in the case of Ecuador, as well as Peru, Colombia, Bolivia, we share the Amazon, Brazil, yeah. So we have the largest biodiversity reserves in the planet. This is particularly true in the case of Peru and Ecuador. We have the most important region of biodiversity in the Western Hemisphere, which is the Yasuni National Park and the surrounding area, the Upper Napo Basin, which is partially located also in Peru. We didn't find any other region in the planet with so high biodiversity. That's why we need an international commitment to preserve it. That was the idea of the Yasuni-ITT initiative. Regarding mining, I made an analysis about it. And based on information about proven reserves, in the case of Ecuador, and the profitability that they can have, mining will be completely unable to replace oil. That means that all the future profits that the state is going to receive from mining will be about 10% of the current oil profits. That means that even if we implemented this booming expansion of mining in Ecuador, which obviously has a very high environmental impact because it's also located in the Amazon basin, we are not going to get the money. So actually the benefits compared with the cost is not as favorable as has been presented. So I think we have to analyze in deep the hidden costs of mining. Actually, in Ecuador, we don't have any developed open pit, large-scale mining activity yet. But based on for example, on the experience of Peru, which actually has been very conflictive, as Tony Bevington analyzed, I think it won't be the best solution for the Ecuadorian case, at least in my opinion. Regarding the Amazon land use model, as opposed to the case of Brazil, in Ecuador, deforestation is mostly the result of settlements for very poor people. It's not a huge expansion based, for example, in soy or sugar or eucalyptus, as it happened in several places of Brazil. So it's not a large-scale capital-intensive deforestation. It's mostly the result of new settlements of very poor people. Obviously, in most of the country, Amazon soils are not treated for agricultural production. That leads to disaster. That's why we are replacing one of the most biodiverse regions in the planet for a desert, because the destruction cannot be reversible, and it's a long-term environmental cost. The only way to avoid it is to eliminate highway construction. And I completely agree with your assessment about the very destroying environmental impacts of highway construction, both in Brazil and Ecuador. So we need a new model. That's why we need to create different alternatives, based, for example, in agroforestry and techniques of cultivation for already deforested areas that can be more productive in the long term and avoid the problem of this declining soil productivity.
Can you comment on what species would be?
Well, we can have a combination of, for example, cacao trees with sometimes coffee and some other native species. Can provide some basic food for the family, and at the same time take care of the environment. There are some techniques even based on the traditional indigenous cultures with some changes that can be very suitable for doing that. It has been the way in which traditional indigenous communities did it in the past. Regarding neoliberal policies, both in Bolivia and Ecuador, I am very skeptical about the possibilities of sustainable social development based on extractive industries. I think we can be successful in filling the pockets of some investors, or we can be successful in creating a short-term boom. But in the long term, the situation will be very, very worse. If you see, for example, the Andean mountains, we are going to have a completely destruction of our glaciers in about 50 years if we don't stop climate change. So actually, the Andean region is quite sensitive to climate change, and we need to share a kind of common policy preserving our natural endowment. If we don't do it, we are going to have maybe for 10 or 20 years some economic gains, and everything will be destroyed in the next decades. That's why we need a turning point in our development strategy. And finally, regarding the current policy of the government, actually I completely agree with what the government did in terms of first diversifying energy sources. I think it's a very good investment. It's the first time the government did so in about 40 years, creating renewable energy sources, mostly hydro, solar, wind power, and so on. I think also the investment in education, broadly speaking, is good. The only point I think it lacks is the way, a kind of credible way of economic diversification. Because investing in education is very good, but it needs to be complemented with a diversification of the productive capacity of the economy. And that's the point in which I didn't get a credible path of change. So I think actually the government, from the social perspective and from the economic, the energy perspective, is for the first time in several decades doing a very good policy, but it's not enough. I think we lack a coherent environmental policy, And also we lack a credible economic diversification policy, because the one we applied in the last 4 years didn't work out, or at least didn't work enough. And it is not easy. It is not easy. And the proof is that no oil-dependent economy has been successful in the world. So it's not easy to invent a model, a different model, but we have to. Otherwise, the situation is very difficult. And the only advantage that we have compared, for example, with South Asia or with the Middle East is our biodiversity and cultural heritage. That's why we need to diversify tourism towards tourism, ecotourism, and sustainable development, because we have the natural resources basis that other countries lack. Actually, well, the situation of indigenous peoples in Ecuador has been deteriorating since the inception of the oil boom. For example, in the Yasuni National Park, we have the two only remaining still non-contacted indigenous peoples in the country. They are very jeopardized by oil extraction. And we have analyzed social indicators about the living conditions of both indigenous and non-indigenous people in the Amazonian basin. They are among the worst in the country. So actually, the effects of oil extraction on local development, particularly in the Amazon, are not so good. Actually, are very unsuccessful. That's what we need to create different economic options, which will be not capital intensive, but rather labor intensive and based on local possibilities of communities. That's why it's very important to think about agroforestry, ecotourism, communitary tourism, and these kind of options. And also, I think international contribution for preserving biodiversity and carbon sequestration. I have been participating very strongly in the design and implementation of the Yasuni-ITT initiative since the beginning of it. In my opinion, actually, the Yasuni initiative didn't fail. We have the most significant support from the international community. For example, we have a unanimous support from the German Parliament in 2008. We have the support from the United Nations, a personal support from the General Secretary Ban Ki-moon. We have the support from 5 Nobel laureates and very distinguished politicians all over the planet and so on. So what actually didn't work out, in my opinion, is the lack of consistency in the government's discourse about the initiative, because they were talking about extracting the oil several times before this final decision. So we didn't have a strong and unified and coherent environmental policy at the same time. I think now we have an important social mobilization in the country, particularly among young people, in favor of not extracting the oil in the Yasuni National Park, which is actually the most biodiversity hotspot in the Western Hemisphere. And I hope that we are going to a kind of popular referendum, or a constitutional referendum about it. And actually the support within civil society in Ecuador has been very strong. We have an opinion poll that 92% of the population was, a week before the decision of the president, in favor of not extracting the oil from the Yasuni-ITT. So this won't be the end of the initiative, because I think the idea will be probably recovered in a future international agreement, because it's not possible to avoid global warming without keeping part of fossil fuel reserves unexploited. That is essentially the idea of the Yasuni initiative. And also preserving biodiversity I think is needed, not only for Ecuador, but for the humanity as a whole.
Well, thank you very much. We can thank you, Professor.